Hi everyone, welcome back to another episode of Charting Markets with Jeremy. So for today, let's take a look at the US markets, mainly looking at the S&P 500 index. After seeing some volatility kind of kicking into the market over the past few weeks, probably it's good right now to take a look and possibly identify some support level that we think would eventually lead to some rebound or even a bottom. So I think it's always good to start off by looking at the longer term time frame first. So here is the S&P 500 index on the weekly time frame chart. And as you can see over here, we have actually been trading in a rather bleak kind of downtrend here right now, especially over the past 4 consecutive weeks. And if you were to measure the current sell-off that we have seen from the market top to the recent low, we have actually fallen about 12% in just a short time span of 4 weeks. And this has been mainly caused by the fear of the Fed raising interest rate too quickly, as well as them kind of tightening their monetary policy too aggressively. So right now, I think with this sell-off, it does look like we are trading right at some key support level. So first one that we would like to highlight, at least on the longer term chart here, would be the 60-week moving average, which is this blue line over here. You can see after the S&P actually broke below this red line, the 20-week moving average, pretty much the bearish momentum just accelerated, and right now we are probably trading around this 60-week moving average, which we would think there could be some bullish rebound playing out around this level. And this also coincides with a support at around 4235 points, which used to be a resistance and then recently turned into a support. So that will be the key level that we are watching here closely in terms of holding this general uptrend intact from a longer term perspective for the S&P 500 index. And if I can draw your attention back to some past examples, you can see over here, during periods of sharp sell-off drawdowns, the 60-week moving average does actually provide a good guide in terms of where prices tend to actually bottom out and bounce back into an uptrend. So you can see here, I've highlighted some examples here in yellow. This is a good example here back in March. You can see this sell-off was pretty firmly supported by the blue line, which is the 60-week moving average, followed by a sharp rally in price. Same example played out as well here in May as well as August of 2019. Where the 60-week moving average also kind of acted as a floor, preventing price from falling further, and then uptrend actually resumed. So possibly this could be playing out right now, where we expect this 60-week moving average to become this new floor for this general uptrend. And if you were to take a look right now at the daily time frame, a closer look from a near-term perspective, the first thing that actually stands out is actually the relative strength index over here, where we have actually kind of slipped into the oversold condition going back since last week. And in fact, this week, we have actually seen the RSI falling to an oversold low of around 23 just on Tuesday. So that by itself, with us right now being in the oversold level, I think it tells us that there could be limited downside, even though that might be some further pressure to the downside. I think right now we do expect this cluster of support here, mainly around 4200 points to 4300 points to actually hold, despite seeing this weakness ongoing right now. If we were to fall down further, it will also mean that the RSI will actually dip down to even more extreme levels that is actually oversold. So right now, I think we do expect this near-term support to hold. And that will be the base case scenario where we expect 4200 to 4300 being this level where price starts to consolidate and stabilize, and then after which possibly leading towards a rebound back into the uptrend. So some key thing to actually note here on the daily time frame, I think this kind of consolidation price action will play out once again, where we actually back in September saw prices actually bounce around this 4300 support for around 3 weeks before it actually bottoms out with some breakout price action as a signal. So this time around, again, with us falling around 12% over 4 weeks, I think it's a bit hard to see an immediate V-shaped rebound over here. But instead, probably we would take some period of consolidation first, probably the next 2 to 3 weeks around this cluster of support, before we see the uptrend actually establishes itself and bottoms out. So right now, I think we have started to see some early indication of some bullish price action here, especially over here on Monday, where we have actually saw a sharp reversal move forming this big hammer reversal bar. So probably what this would actually mean for the market right now is further consolidation within the range of this hammer, probably over the next 2 to 3 weeks. And for the confirmation of the bottom, I think what is needed right now is for the S&P to actually close back above this green dotted line, which is the 200-day moving average, right now at around 4,410 points. So keep a close lookout over there. Once we do actually get this close above this 200-day moving average at 4,410 points, then I think that will likely kickstart the next leg higher to possibly see the uptrend resuming for the S&P to retest probably the range of around 4,700 to 4,800 points. And just to cover a bit on the rate hike cycle, so if you were to take a look back at historical study in terms of how the general market performs following periods of rate hikes, usually a recession don't just start immediately following the first rate hike, which right now I think the market is expecting much to be where the Fed would raise its interest rate for the first time over the past few years. 2018 was the last one. So recession only kicks in usually around 2 to 3 years following the first rate hike. So that would also tell us that this bull market that we are right now seeing, at least from a longer term perspective, still has further room to actually grow. And I would kind of say that this period of pullback right now actually presents traders, investors a kind of a more timely point in terms of accumulation right now as we actually go through this period of correction, as well as us right now being in an oversold level. So all in, I think right now, keep a close lookout. I think for the next 2 to 3 weeks, we will likely see further consolidation around this support at 4,200 to 4,300 points. And then after which a further breakout higher above the 200-day moving average would then kickstart the next leg higher, where we see the uptrend actually resuming down the line. Yeah, so that is all we have for today, and we'll see you guys in the next one.